everybody says that the equity investments are always risky. Are they really so? Let me bring in front of you a topic where the risk is minimalistic. Let's discuss about what exactly is an arbitrage fund and how does it really work. And it is basically for those who feel that equity markets are always volatile and they are not ready to absorb that volatility into their portfolios. So guys, presenting in front of you a small topic of an arbitrage fund. So what are arbitrage funds? So arbitrage funds are those funds where buying and selling of the stocks takes place at a simultaneous manner by the fund manager. So how does a buying and selling of these funds takes place? I will give you an example. Let's say you buy a stock at one platform, which is NSE, and at the same time you sell that same stock at BSE. So basically the differential of price between these two exchanges helps you out in gaining benefit, and arbitrage funds basically make use out of this spread, which is between the differentials between the two exchange. Or the arbitrage funds also work in a different manner where the fund manager is buying in spot, that means at a future level. So by buying at a present level and selling it into the future, there is always a margin which is involved. So by buying and selling into futures, the fund manager also makes profit, as a result of which the arbitrage fund captures that profits. So these are few ways through which the arbitrage funds basically work. And by having a proper strategy, the arbitrage fund is seen to give returns in the range of 7 to 8%. And mind you guys, the taxation on the arbitrage fund is always an equity taxation. That means the investor is subjected to 10% long-term capital gains with an exemption of 1 lakh rupees of capital gains. And in the short term, which is less than 1 year, the investor is subjected to short-term capital gains, which is 15%. So guys, people who are looking out for conservative returns but doesn't want volatility into their portfolios can easily go for arbitrage funds, because here the fund manager is actively involved in buying and selling of shares in two different exchanges or between the spot and the futures. So by having 8% of return and post-tax returns which are anytime higher than fixed deposits, the investor is always at a beneficiary end. So guys, what are you waiting for? If you are a conservative investor, go and invest your money into arbitrage funds. Watch me out for my new videos which are coming out soon over Finance with SIDDARTH.